Hello, everyone. This is Constantino Usaga, broker associate with Florida Homes Realty and Mortgage here in Jacksonville, Florida, North Florida. Today, I wanted to talk to you guys about credit standards, just so first-time buyers, can understand a little bit of what HUD, VA, Fannie Mae, Freddie Mac, and all the other agencies and investors that determine if a borrower is qualified for a loan. So this criteria applies when any evaluation for a home loan for credit worthiness. When making a decision to lend, the lender must consider what is referred to the 4 C's of underwriting. And those are character, which is credit; capacity, which is income; capital, which is assets; and collateral, which is value, which is the appraisal. So these are the 4 C's of underwriting, right? So again, you have character, you have capacity, you have capital, and you have collateral. Now, just to talk briefly about each and one of them, character pretty much is going to emphasize on the overall history of the borrower to make a sound judgment regarding their attitude towards credit use. So that's what character focuses on. Capacity talks about income. Does the borrower have the determined work history with stability, which is 2 years, minimum of 2 years, in the same line of work, same occupation? And if there's sufficient income, not just having the 2 years of the stability with work history, but having sufficient income to meet their monthly obligations. So what does it mean to have sufficient income to meet your monthly obligations? They use qualifying income should be stable, it should be predictable, and most likely to continue. So the underwriter must determine whether the borrower demonstrates the financial determination to repay the mortgage as well as other obligations. So if he determines stable income, the underwriter must be able to conclude that the income is likely to continue for the next 3 years. So when talking about capacity, we'll evaluate the borrower's capacity considering the following factors: a payment shock, reserves, income stability, debt ratios, and history of savings. So when we speak about capacities in the 4 C's of underwriting, the underwriter will take all that information into consideration. Now, capital is pretty much a borrower's assets. Does the borrower have sufficient assets to cover the cost of the loan? This is very important when documentation to review to ensure, for example, that large deposits are handled in compliance with every agency. Also, if there's NSF deposits on bank statements to support the income, Social Security, pensions. So everything that pertains to assets will be reviewed. So when the underwriter reviews the assets, right, the capital, the 3rd C of underwriting, the underwriter must check the borrower's current balances and statements, and the borrower must have sufficient capacity, capital, to meet the closing cost obligation. So what does it mean to meet your closing cost obligation? It means that if your closing cost is $25,000, including your down payment, and you only have $20,000 in your savings account, then you don't meet the sufficient capacity to meet the closing cost obligation, because you're $5,000 short. So that is what the underwriter looks at when determining your capital. The fourth C is collateral, which has to do with value, which pretty much with the appraisal must be, which will determine the value is supported to support the value. So it's pretty much the appraisal. So the 4C of underwriting, which is collateral, has to do with the value. So once the the appraisal comes in, does it support the value? So the underwriter must determine the value and the type of property being financed. It's important for the underwriter to confirm that the loan amount does not exceed the property value. So that is the fourth C of underwriting. So I wanted to go over with you guys, especially for first-time buyers. I think it's very important and it's very useful for you guys to understand a little bit about the loan process and what the bank looks like at when trying to get pre-approved or pre-qualified for a home loan. So, like I said, these are when making a decision to lend money to a borrower, the lender must consider what is referred to as the 4 C's to underwriting, which is character, credit, capacity, income, capital, assets, and collateral, the value, which is the appraisal. So again, my name is Constantino Usaga. I'm a broker associate with Florida Homes Realty and Mortgage here in Jacksonville, Florida. I hope you guys really enjoy my video, and please look for more videos. And you can follow me all over social media as Constantino the Broker on Instagram, Facebook, YouTube, Twitter. All you have to do is put Constantino the Broker, and you'll be able to find me on social media. Thank you for following me and listening to my videos, and have a wonderful day.